We get taxed on our income, we pay sales tax, we get taxed on the interest we make from our savings or our investments, we get taxed yearly on things like property taxes, and we even have a secret tax. And this takes people's hard-earned money away from them and out of their savings accounts without most people even realizing it. This is what we call inflation. So today, we're gonna be talking about the biggest Ponzi scheme that you and I are a part of, and that is our current financial system. Think about it. Our currency is the property of the government. We can't print more of it, but they can. We can't burn or destroy it, but they can. We can earn it, but then they can take it away. It's not ours because it's theirs. And so that means that they can do whatever they want because it's their money. Before fiat money, or the paper money that we use today, we use gold or silver as a currency because it has real value. And that's because there's only so much gold. And no one truly had control of it until 1934, when President FDR signed an executive order to seize all gold from US citizens. This gave the government more control over their paper money because now they had the control over gold, which was no government's currency. So gold is mined at a slow rate. And so a country on the gold standard has to buy more gold in order to print more money. This would drive up the price of gold while also making it more expensive for countries to grow. So not only would this slow the growth of the government, it would also keep the government's spending or inflation in check. And we all know governments don't like that. And so in 1971, the US was taken off of the gold standard, leading to a huge rise in inflation, meaning that the value of our cash would continue to go down year over year. And so this actually hurts all of us who put our money into a savings account because the interest on our savings is actually less than that of the inflation rate. However, since banks don't hold a lot of cash, but instead hold hard assets like gold or real estate, they are unaffected by inflation because their assets actually appreciate against the dollar. And this is due to their demand and their scarcity. And so this means that the people at the top are hurt the least when the government decides to print more money, while the people at the bottom are hurt the most. And these are the people that hold a majority of their wealth in a bank account. Now, don't get me wrong. It is a good idea to have an emergency savings. I personally do. But because assets appreciate over time, people who invest in the stock market, real estate, gold, etc., usually end up further ahead than those who just save their money in a bank account. Think about that. Banks are in the business of making money. If leaving cash in the bank was such a good idea, then these banks would be putting that money in their own savings accounts. But instead, you see these banks investing in things like real estate, the stock market, or gold because they get far better returns. Banks were only required to hold 10% of the cash given to them by their customers as cash on their balance sheets, while the remaining 90% would be lent out in order to generate an income off of the customer's money. And this is called the fractional reserve. A fraction of the customer's money was set aside while the rest was invested. And that is until March 26th, 2020, when the Fed announced that the fractional reserve would be cut to zero. This was set in place in order to encourage banks to lend out all of their money to help the people that were affected by 2020. So now, banks are legally allowed to lend out all of their money. This puts even more risk on the banks because now they're potentially even more exposed than they were before to a bad investment. And now throw in a worldwide pandemic. This will potentially make it much harder for banks to pay back their customers, because if their money is tied up in assets, then banks would have to liquidate or sell those assets or investments in order to pay back the customer. And so now banks have to be even more careful about who they're lending their money to. This is so dangerous, especially for those of us who are saving our money in a bank account. Now the Fed can print as much money as they want with little to no effect on the banks because the banks are holding little to no cash, while the cash is losing incredible amounts of value. So what happens now? Well, if we can't access our money because the banks have it tied up in assets, then the banks will either have to sell those assets potentially at a loss in order to pay their customers back, or they'll have to request cash from the Federal Reserve in order to expand their balance sheet and pay back their customers. Meaning that the Federal Reserve will have to continue to print more money, continuing down that spiral of print more money, lose more value. The purchasing power of cash is going down dramatically, while the people at the bottom won't even realize until it's too late. So we have the top richest people in the world who hold a majority of their wealth in assets or investments. Then we have the middle class that holds about half of their wealth in investments and half in a savings account. And then the lower class mostly just save. They don't really invest, and so this literally makes it impossible for them to beat inflation. So I am not a financial advisor, but I do want to help people. And so the younger that you start investing, the greater the chance you have of setting yourself up with a better future. The other way is to try and work as hard and as much as possible to try and get ahead. I personally like to do both, but I hope you guys got value from today's video. Did you learn anything today that you didn't know before? If you did, then please make sure to leave a thumbs up down below and subscribe if you guys want to see more content like this in the future. This is Travis Trades, and I'll be seeing you guys very soon in the upcoming episode. Take it easy, guys.